Well, hello. Tonight I was going to do the YouTube live event, and I tried and tried and tried and could not get the encoder to work properly. And so my YouTube live event was a total bust. Now, during that event, what I had intended to do was to answer any questions that you have about trading with foreign brokers, um, the advantages and the disadvantages, or just any questions that you had. Now, since I obviously do not have your questions, what I'm going to do in this video is just explain to you why I prefer to trade with a foreign broker as opposed to trading with a broker in the United States, and just give you the pros and cons and the reasons why I feel the way that I do. The first thing that I'd like to talk about is why we have the trading rules that we have in the United States. And the reason that the rules were implemented was essentially because prior to this, when Forex was not regulated at all in the United States, it really was the Wild West. And there were brokers that were taking advantage of people, and people who were trying to trade Forex really didn't have any experience with trading Forex, and they were trying to trade it like the stock market, which it's not. And it was a really big mess. And a lot of people lost a lot of money for a lot of different reasons. But the fact of the matter is that when it was all said and done, the rules that were implemented by the NFA and the CTFC are really more geared to protecting people from their own stupidity, and not really to protect traders from unscrupulous brokers. And I think my point is, well exemplified with this current situation with FXCM. I mean, this abuse of the clients from FXCM has been going on for years and years and years, both prior to when these rules were established and since. So, when it comes right down to it, the rules that are in play for Forex in the United States really don't do the job that they were supposed to do, which, a regulatory authority should be protecting, citizens from, the brokers, not trying to protect the citizens from their own stupidity. So anyway, that's what I think about that. There is, of course, a whole lot more to that story, and I could literally spend 2 hours talking about how these rules all came into being, because I lived through the entire thing. I was a trader long before the rules were developed, and I was very actively involved in trading when the rules were being developed, and I have continued to be involved in trading since. But I'm not going to talk for 2 hours about that, so I'm going to end that conversation right here. But if anybody wants more information about how that all came about, just email me and I'll be glad to talk to you on the phone about it. But turning the conversation back around to trading with foreign brokers, the main reason why you hear so much negativity about trading with foreign brokers is because people say, you're not going to be protected. You have no protection. What are you going to do if that foreign broker, is unfair with you, or, what if they steal all your money, or, whatever? What are you going to do? Go marching halfway around the world to punch somebody in the nose or something. Well, obviously you're not going to do that. But what I just want people to realize is that when it comes to Forex trading, there are so many ways to lose your money that, you can have an account here in the United States and have a broker, essentially steal all your money anyway. And so people are under a real false assumption that just because they are trading with a U.S. broker, that everything is all safe and sound and secure. And I'm just going to tell you that it's not, because there's so many ways in Forex to lose money that, an unscrupulous broker is just one of the aspects to that. And actually, it's not even the worst, it's not even the most prevalent way of losing your money with Forex trading. But when you are trading with a foreign broker, it does add several more layers of risk to the mountain of risk that you're already assuming by trading Forex in the first place, because of the fact that it is, the broker is very far away from you. So, if they go under, you really have no recourse, none. And then you also have to consider, country risk. What if that country that your broker is in has something go on that causes the businesses there to go under or whatever. So it does add more elements to the mountain of risk that you're assuming by Forex trading. But I think that that additional risk is well worth it when you can trade with higher leverage and without the first in, first out rule, and have the ability to hedge your trades when you want to, or maybe when you need to protect your account. So for me, the advantages of not trading under the very restrictive rules of the U.S. regulators outweighs the additional risk that I take by trading my accounts with a foreign broker. But one of the important things before you choose a foreign broker to do business with, you just have to use common sense and use your head and do as much research as you can on that broker to try to figure out if they are going to be, a broker that's worthy of your business. There are a lot of brokerages out there that are nothing but scams. There are a lot of cheaters and a lot of people who will take advantage of you. But by the same token, there are still a few brokers in the world that try to do right by their clients, and they are in business for, the right reasons, and maybe they're not perfect, but if you do your research on the brokers, you can usually get a pretty good idea as to whether or not the broker that you're doing business with is, going to be more or less prone to scamming you and taking advantage of you. So anyway, that's just the best you can do. But honestly, at first glance, any of these brokers on their websites are going to look like, oh, yeah, they're great, because anybody can develop a really slick website. So you have to go further than just a skin, you have to go deeper than skin deep and really do as much research as you can. Now, there's no guarantee, ultimately, that the broker you select, hasn't fooled you or tricked you into thinking that they're something that they're not. But you just have to be careful. I've been trading with foreign brokers for years, and I've never had a problem with any of the foreign brokers that I've used. In fact, the biggest problem that I ever had with a Forex broker was with a Forex broker right here in the United States. So, it's just, you just have to be careful on who you're doing business with. But my personal experience with foreign brokers has been actually very good. And the broker that I trade with right now no longer takes new clients from the United States. So unfortunately, I can't refer them to you because, it wouldn't do any good. So you're probably wondering, and I hope you're wondering, what is the best way to protect yourself in Forex trading when you have all these different kinds of risks? And I'm going to be very honest with you. The best way to protect yourself with your Forex trading and your funds that you're using for Forex trading is to have a coherent trading strategy. And then when you do make a profit on your Forex trading, do not try to just exponentially grow your account. As you make profits in Forex, make withdrawals. Withdraw the profit that you've made and put it back in your pocket, because then that money is protected. The money that's still in your Forex account is still at risk. It will always be at risk as long as it's in your Forex account. You have to assume that that money is always at risk. But if you turn out to be a pretty good trader and you make a consistent profit and you're making consistent withdrawals of that profit and putting the money in your pocket, the money that you have at risk that's still in your Forex account becomes less and less and less, critical. Now, initially, the money that you deposit is very critical to you. You don't want to lose your money. But, if you've made withdrawals over and over and over, and ultimately you've withdrawn a lot more money than you originally invested anyway, but you still have enough left in the Forex account that you keep making more consistent profits, you get a lot less worried about all of the horrible things that could happen if the money that's still in the Forex account disappears off the face of the earth for whatever reason. Now that leads me to another really important point, I think. And that is that when you initially are making a deposit into a Forex account and you're going to start trading, you need to look at that money and you need to say to yourself, do I need this money to live on in the foreseeable future? And if the answer is yes, then don't open the Forex account. Keep your money, because you should never invest money into a Forex account if the loss of that money would change your lifestyle. So, if you don't have disposable income that you can trade Forex with, then please don't trade Forex at all. I have been teaching people how to trade Forex for over 15 years. And I can tell you for a fact that I have never seen anyone be successful with their Forex trading if they were worried about what would happen if they lost that money. It just adds a psychological element to your trading that is almost impossible to overcome. I would also like to suggest that if you're a person who cannot afford to invest a minimum of several $1,000s into a Forex account, preferably not less than $5,000, then you really should not be trading Forex. because people who want to trade Forex and they want to start with, a couple $100 or $500 or, even $1,000, whatever, it's very difficult to be successful because the less money that you have in your Forex account, the harder it is to be profitable. Because what happens is that when you have a healthy amount of money in your Forex account, that doesn't mean that you're going to make bigger trades necessarily than the guy who has just a little bit of money in his Forex account. But what it means is that if you have a lot of money in your Forex account and you're making relatively small trades, none of those trades can do serious damage to your account if you're trading correctly, because you could be in a bad trade that could go on for a very long time before that trade would eat up any significant portion of your total bankroll that you have in your Forex account. But when you're trying to trade with small accounts, and even when you make a smaller trade on a small account, the percentage of your account is still, that trade is still eating up a larger percentage of your account. So you cannot afford to, let that trade go ahead and ride if it has to for a while, because you're too worried about, losing 10% of your account or something like that. So the thing is, the larger the account that you start with, the more likely it is that you will be successful. And this is because ultimately there are only two ways to lose money in a Forex account, as far as, reasons, two reasons regarding your trading. There's only two ways to lose money in a Forex account. The first way is to close a trade for a loss. If you close a trade for a loss, if you have it stop out at a loss, you just lost money. Now, the only other way to lose money due to your own trading is to have a margin call. And a margin call is when you flat out run out of money in your account to cover the negative equity in the trades that you are carrying. So if you can avoid those two things, and I say that they're both very avoidable, there is never ever a reason to have a margin call if you are trading your account correctly, and there's really no reason to ever have to close a trade for a loss, except in very rare circumstances, if you are trading your account correctly. So anyway, as you can see from my website, I teach and mentor Forex trading. Now, I charge $250 a month if you want a monthly subscription to my mentoring service, or you can buy a lifetime membership to my mentoring service for $3,000. Now, in the past, I've been selling my mentoring service for $3,000 for well over 10 years. Never raised the price. And I just started offering the monthly subscription recently. So, but what you'll find is that for me to teach you how to trade the way that I trade, where you really will be closing almost every trade you make for a profit, it will take me anywhere between 6 months and a year of working with you before you will be totally proficient to be an independent trader. But of course that depends a lot on how much time you spend with me. And my clients essentially have access to me. If the Forex market is open, I am accessible. I literally am available at 3 o'clock in the morning, or 3 o'clock in the afternoon, or 9 o'clock at night, or 9 o'clock in the morning. I am always here and always available to my clients. So if you are interested in that, there are links on my website where you can subscribe to either the monthly subscription or the lifetime subscription. But please know, going into this, that before you will be totally proficient, it will take you anywhere between 6 months and a year, depending on how much time you want to spend with your own Forex education. You should also know that there are no guarantees available from me or from anyone in the world that guarantee that you will be successful at Forex trading. The most important reason why people are successful at Forex trading is because they have a coherent strategy and a coherent money management plan for their Forex accounts. But the Forex markets are always changing. Market conditions change all the time. The market conditions today are nothing like the market conditions were 4 or 5 years ago, or 10 or 12 years ago. So, it's always changing, and Forex seems to have the ability to always throw curveballs when you least expect it. But what I can tell you is that I have been using the same strategy, basically the same strategy, for over 15 years, and it has not let me down yet. But I cannot guarantee to you that there cannot be something that could change in the Forex world that would possibly make my strategy no longer viable. So anyway, I think it's very important that you realize that before you decide to trade Forex, or before you decide to subscribe to my mentoring service. As you scroll down through my website, I do have a link here to a foreign broker that is one that I would actually be comfortable trading with. Now, I don't officially endorse any broker, but if you are looking for a broker that you can trade with, where you can have higher leverage and have hedging availability and not have to put up with first in, first out rules, this is one of the brokers who is still accepting U.S. clients. So I have the link here to their website, and I've also produced a short video. It's about 15 minutes, going step by step through the process of making an application and opening an account with that broker. So if you want to see exactly what happens at the different steps, you can watch that video, and that way you will know before you start an application if it's something that you want to do. So I just wanted to let you know that that is available. Now, this broker does have a minimum required deposit of $2,000, which actually is less than what I recommend your minimum deposit should be. But do know that to open an account with this broker, it will be a minimum of $2,000. Now, if you are a trader who really is not, at that level yet, and you really still want to try to trade with an account of, a couple $100 or $50 or whatever, if you contact me by email, I will send you a link to another broker who does take those really small accounts. So if you want that, just send me an email and tell me that you want that link, and I will be happy to send it to you. And also, you do not have to open an account with this broker to subscribe to my mentoring service. Whatever broker you use, it doesn't really matter, because I can teach you how to trade. You know, my trading strategy is absolutely not broker specific. So if you are even using a broker in the United States, I can still teach you how to trade very successfully, although there would be some elements of my trading technique that I teach that would not be applicable to you. But you do not have to have an account with some broker, you know, that you see on my website for me to teach you how to trade. The other thing that I want to make explicitly clear is that, you know, all the regular, you know, risk disclaimers apply. Forex is not for everyone. You can lose money. Leverage can work for you as well as against you. And in some circumstances, it is possible that you could lose more money than you actually invested in your Forex account. Although in all the years I've traded, I've only seen that happen in a couple of circumstances. So it's not very likely, but it's possible. And so anyway, always read the risk disclosures with your broker, read the risk disclosures with your trading platforms, and really know what you're getting into before you trade Forex. Also, I am not a financial advisor, and I do not give you trade recommendations. I don't do that. Everything involved in working with me is for the purpose of your education. So I show you how to look for trade opportunities. I explain why a certain price point is a trade opportunity. I explain the probability of that trade being successful. I also explain, you know, this consequence if the trade is not successful, and what to do about it if you were in that trade and it was not successful. But everything that I do with my students is for their educational purposes only. I hope this video has helped to give you some insights on trading with a foreign broker, and maybe given you some food for thought as to whether or not you would want to work with me with my mentoring service. But either way, or whatever, doesn't matter. If you have any questions whatsoever about Forex, feel free to shoot me an email and ask me, because I am very willing to share my knowledge with anybody who wants it. So feel free to contact me at any time, whether you subscribe to my service or whether you don't. I'm always happy to talk about Forex. So thanks for watching.